The characters in this story are a brother Leo, his sister Mia, and their mom in the background, and Dad, who is an accountant. Dad taught the kids some basic bookkeeping and explained why it is necessary for a successful business. What is an account? An account is a separate record for each type of asset, liability, owner equity, revenue, expense, and draw used to show the beginning balance and to record the increases and decreases for a period and the resulting ending balance at the end of the period. What are the types of accounts? Types of accounts are the balance sheet accounts, which include assets such as cash and inventory, liabilities such as accounts payable and loans payable, and owner's equity. We also have our income statement accounts, which include revenues such as our sales and expenses such as cost of sales. One other type of account is owner's draws that we use when the owners take money out of the business. A business uses records such as journals and ledgers for recording their transactions. What's a transaction? A transaction is any economic event that involves the exchange of goods, services, or money between two or more parties and can be measured in monetary terms. Recording transactions is based on the double-entry bookkeeping system, the accounting equation, and what are called debits and credits. Some examples of transactions are making a sale, getting a loan, and purchasing equipment and inventory. Double entry is a type of bookkeeping system that requires every transaction to be recorded in at least two places, accounts, using a debit and a credit. Debits and credits are used to record the increases and decreases to an account's balance. No bookkeeping system would be complete without report. A balance sheet reports what a business owns and owes to suppliers and the owners, while an income statement reports if the business is making any money. They say a picture is worth 1,000 words. So, let's take a look at some of the records used in performing bookkeeping. First, in order to record and summarize your business's transactions, you must first analyze and record your transaction in a record called a journal, also known as the book of original entry. As you can see from the illustration, the journal contains the date, an explanation of the transaction, debit and credit amounts, and a posting reference that shows the entry has been posted to the general ledger. Next, we have the general ledger. The general ledger is a master record containing a complete history of all the financial transactions for a business. The transactions from the journal are summarized and posted to the general ledger. It is organized by account name and/or account numbers. As you can see from the illustration, the general ledger contains the following columns: date, description of the transaction, posting reference, debit and credit amounts, and a running total of its current balance. The posting reference refers back to the journal and shows the source of the entry.
Dad discussed, set up our records, and taught me how to use these records.
No bookkeeping system would be complete without the end result of the bookkeeping process, namely the financial statements. Two of the major financial statements are the balance sheet and the income statement. Presented behind us are a sample balance sheet and income statement.
Yes, as we can see, the balance sheet shows us what we own and who we owe and what's left for the owners.
And the income statement shows us if we're making any money.
Welcome to the lemonade stand. We'll begin with planning the business. Leo and Mia are in the den discussing and planning.
Let's get going. First, we need capital, also called equity. I'm putting in $3, and Leo, you're putting in $2. Our total initial capital investment is $5. After our initial investments, our business now has an asset of cash of $5 and owner's equity capital of $5. Accountants refer to this as the accounting or balance sheet equation. Assets equal liabilities plus owner's equity. Dad said this is called double-entry bookkeeping. Leo, do you see how it balances?
Yes, Mia, but we still need to buy some equipment, a table, sign, and cash box. I checked, the table, sign, and cash box will cost us $10. We only have $5.
Leo, I got us covered. Our equipment will cost us $10. I know we only have $5, but I'll lend our business the remaining $5. That's a loan from me called a liability loan payable, Mia. I entered these transactions in our journal and posted to our general ledger, so let's head to the store and get our equipment.
Transaction 1. Investing in their business. The entry to record this transaction is a debit to cash for $5 and a credit to owner's equity Leo $2 and owner's equity Mia for $3. Transaction 2. Loan from Mia. The entry to record this transaction is a debit to cash for $5 and a credit to loan payable Mia for $5. After Mia recorded these two transactions, she prepared a balance sheet, which has the following balances: cash $10, loan payable Mia $5, and owner's equity $5. Leo and Mia head to the store and purchase their equipment: a table, sign, and cash box.
I rounded up our table, sign, and cash box. Let's head to the register and check out.
Okay, Leo, I'm ready. I'll write a check for $10 and pay at the register.
Leah and Mia are back in the den recording transactions and preparing a balance sheet. Transaction 3. Purchase of equipment. The entry to record this transaction is a debit to equipment for $10 and a credit to cash for $10. Mia records the purchase of their equipment transaction in their journal and posts to their general ledger.
I checked the prices of items needed for our inventory purchases: lemons and sugar, and we need $6. Since we have no cash, Mom loaned us the money, so we now have an accounts payable owed to Mom.
Transaction 4. Accounts payable $6 loan from Mom. The entry to record this transaction is a debit to cash for $6 and a credit to accounts payable Mom for $6. Mia records the loan, accounts payable, from Mom in their journal and posts to the general ledger and prepares a balance sheet.
We currently have total assets of $16. Cash is $6, and we have $10 of equipment for a total of $16. On the other side, liabilities and equity, we have an accounts payable Mom of $6 and a loan payable to me of $5 for total liabilities of $11 and total equity of $5 for a total of $16. Leo, do you see how double entry keeps our accounting equation and our numbers balanced?
I sure do, sis. I also see that without Mom's help that we would not have any cash.
Next, they went to the grocery store to purchase their needed inventory, lemons and sugar.
I'll check us out. I wrote a check for $6 to cover the bill.
I'll grab our groceries. So now we owe you $5, and we owe Mom $6. $11 in debt.
That's correct, Leo.
Leo and Mia are back in the den recording transactions and preparing their balance sheet. Transaction 5. Purchase of inventory. The entry to record this transaction is a debit to inventory for $6 and a credit to cash for $6. Mia records the purchase of their inventory transaction in their journal and posts to their general ledger.
Mia, what does our balance sheet look like now?
We currently have total assets of $16. Cash is $0, but we have $10 of equipment and inventory of $6. On the other side, liabilities and equity, we have an accounts payable of $6 to Mom and loan payable of $5 to me and equity of $5 for a total of $16.
Looks like our balance sheet still balances.
Leo and Mia are set up and ready for the first day of sales. The stand is busy. Leo and Mia make sales at 50 cents per glass.
I'll have one glass, please.
Thank you.
I'll also have a glass.
Thanks again. Leo, it's getting late. Let's shut it down for the day.
I'm ready.
The stand sold 20 glasses today. Total sales revenue: 20 glasses at 50 cents a glass for total sales of $10. Leo and Mia are back in the den recording transactions and preparing a balance sheet and income statement. Transaction 6. Sales. The entry to record this transaction is a debit to cash for $10 and a credit to sales for $10 and a debit to cost of sales for $6 and a credit to inventory for $6. Mia records their sales in their journal, posts to their general ledger, and prepared financial statements.
Our income statement has sales of $10 and a cost of sales of $6, resulting in a $4 profit. As for our balance sheet, we currently have total assets of $20. Cash is $10, and we also have $10 of equipment. On the other side, liabilities and equity, we have an accounts payable of $6 to Mom and a loan payable of $5 to me and equity of $9 for a total of $20.
I see we have a new financial statement, an income statement.
Yes, since we made our first sales, we now also have an income statement.
I also see that we only have $10 in cash resulting from sales, but we owe $11.
Transaction 7. Paying debts. Mia pays off Mom's accounts payable of $6 and pays herself $4 of the original $5 loan she made to the business. The entry to record this transaction is a debit to accounts payable for $6, a debit to loan payable of $4, and credit to cash of $10. Mia records their sales in their journal, posts to their general ledger, and prepares a new balance sheet.
We currently have total assets of $10. Cash is $0, and we have $10 of equipment. On the other side, liabilities and equity, we have the loan payable to me of $1 and equity of $9 for a total of $10.
I see we are out of cash and our equity increased. What happened?
Our profit of $4 increased our equity from $5 to $9, and paying off our debts resulted in our zero cash balance.
So the $4 profit is tied up in our stand, and we still owe you $1?
Exactly. We own a $10 stand, but we have to pay back that $1 remaining balance of the loan back to me when we are able to. I think we need to increase our price. Let's try 75 cents a glass to fix our cash flow.
Transaction 8. Mia loan to business. Mia loans the business $7. The entry to record this transaction is a debit to cash for $7 and a credit to loan payable Mia of $7. Transaction 9. Inventory purchase from Mom for $7. The entry to record this transaction is a debit to inventory for $7 and a credit to cash for $7. Mia records these transactions in their journal, posts to their general ledger, and prepares a new balance sheet.
Leo, here is our new balance sheet. We currently have total assets of $17. Cash is $0, inventory is $7, and we have $10 of equipment. On the other side, liabilities and equity, we have the loan payable to me of $8 and equity of $9 for a total of $17.
I see we are still cash poor. I hope our new selling price helps to fix this.
Leo and Mia are ready for their second day of sales. The stand is busy. Leo and Mia are making sales at 75 cents per glass.
I'll have one glass, please.
I'll get it for you.
Thank you.
Get me one too.
Thanks again.
Sis, it looks like we're doing okay even with a higher selling price.
I hope we have a good day.
I'm ready to shut down.
Me too.
The stand sold 18 glasses today. Total sales revenue is 18 glasses at 75 cents a glass for total sales of $13.50. Leo and Mia are back in the den recording transactions, preparing financial statements, cashing out, and celebrating success. Transaction 10. Sales. The entry to record this transaction is a debit to cash for $13.50 and a credit to sales for $13.50 and a debit to cost of sales for $7 and a credit to inventory for $7. Transaction 11. Paying debts. Mia pays herself $8 for the loan she made to the business. The entry to record this transaction is a debit to loan payable of $8 and credit to cash of $8. Mia records these transactions in their journal, posts to their general ledger, and prepared financial statements.
Leo, here is our new balance sheet and income statement. We currently have total assets of $15.50. cash is $5.50 and $10 of equipment. On the other side, liabilities and equity are our liabilities are $0 and equity of $15.50 for a total of $15.50. Our income statement for the day has sales of $13.50 and cost of sales of $7 for a profit for the day of $6.50.
Sis, you said profit for the day.
Yes, Leo, but our total profit is sales of $23.50 and cost of sales of $13 for a total profit of $10.50. A profit of $4 for day 1 and a profit of $6.50 for day 2.
Can we take some money out?
We can only split the cash we have. $5.50 divided by 2 is $2.75 each. Leo, here's your share.
Awesome!
Thanks to positive cash flow and sweet profits.
Transaction 12 paying owners. Mia pays herself $2.75 and Leo $2.75. The entry to record this transaction is a debit to owner draws equity of $5.50 and credit to cash of $5.50. Mia records this transaction in their journal, posts to their general ledger, and prepared a balance sheet.
Leo, here is our final balance sheet. We currently have total assets of $10. Cash is $0 and $10 of equipment. On the other side, liabilities and equity, we have liabilities of $0 and equity of $10 for a total of $10.
What about a new income statement?
We don't need a new one since paying us only affects the balance sheet and not the income statement.
Dad, an accountant, Leo, and Mia are in Dad's home office discussing the business, closing the books. Before presenting their financial statements to Dad, Mia made journal entries to close the books. She made 2 closing entries. First, she debited Leo's owner's equity account for $2.75 and her owner's equity account for $2.75 and credited owner's draws Leo for $2.75 and owner's draws Mia for $2.75. For her second entry, she debited sales for $23.50 and credited cost of sales for $13 and credited Leo's owner's equity account for $5.25 and her owner's equity account for $5.25 to transfer the $10.50 profit to equity. They presented their current financial statements to Dad. The balance sheet has total assets of $10. Cash is $0 and $10 of equipment. On the other side, liabilities and equity, the liabilities are $0 and equity of $10. Leo's equity of $4.50 and Mia's of $5.50 for a total of $10. The income statement has sales of $23.50 and cost of sales of $13 for a profit for the business of $10.50.
I'm proud of you kids. You did a great job of running a profitable lemonade stand, and Mia, your bookkeeping is excellent.
Thanks, Dad.
Dad, I learned a lot about running a business.
Dad, how can we increase our sales?
You'll have to incur some additional expenses such as temporary help needed to wash glasses and do some shopping. Mom helped for free, but normally you have to pay someone or even pay Mom. You should also probably invest in some local advertising too.
Hope you enjoyed and learned a little bit about bookkeeping. If you did, check out Dave Marshall's accounting and bookkeeping site BeanCounter at https://www.beancounter.com.